Welcome to my channel. I'm Scott, and in this video I'm going to walk you through the process of valuing Corteva's stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Let's get started with the model. This is a large cap company, 32 billion market cap. They're trading at $45 a share and they have 705 million shares outstanding. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow peaked in 2021 at 2.2 billion. Then it was a small positive in 2022, negative in the trailing 12 months. But their net income is positive each year. Net income is the profit or loss on the income statement. It's revenue minus expenses. That peaks in 2021 at 1.8 billion, but still pretty strong in 2022 in the trailing 12 months, well over 1 billion. So it appears they're investing a lot into CapEx, which is why they have low or negative free cash flow. Revenue is the sales for the company, and that grows from 2020 to 2022 to 17.5 billion, down a little in the trailing 12 months to 17.3 billion. It did grow 10% from 2020 to 2021. It grew 11% into 2022, but then dropping a little in the trailing 12 months. Commodity prices have come down a bit, so that's probably why their revenue slipped a little. This company used to be part of Dow DuPont, but Dow DuPont spun it off into its own entity in 2018. So now it trades separately from DuPont. We estimated 4 years of future free cash flows. We also estimated the terminal value, which is all cash flows past year 4, that's 48 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $41 billion. We divide that by 705 million shares. And we get a calculated stock price of $58. They're trading at $45, so they're trading at a 23% discount. It's a buy according to the model. The way I calculate their future free cash flow is I take their future revenue estimates. That's usually given by the company or analysts, and I assume a certain percentage of those revenue will convert into free cash flow. The percentage is taken from their prior revenue and free cash flow. And I go 4 years out, and then I assume a terminal value. The formula for terminal value is pretty straightforward. You can find it online. There are 16 companies in the same industry as Corteva, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend $557 million in CapEx, more than the median average, a lot less than Nutrien. They have a really low debt to equity ratio, 0.2. For every dollar of equity, they have 20 cents of debt. They do pay a small dividend, 1.3%. Look at CVR Partners, 39%. They have negative free cash flow, so it's worse than the median average. They're the largest company in this industry. All their price multiples are worse than the median, although their price to book is better than the average. So they do appear overvalued according to their price multiples. They generate lots of revenue, second highest on this list. And we can't look at their 5-year annual revenue growth rate. They haven't been public that long. Let's look at their latest 10Q. This is as of 9/30/2023. Let's start with their income statement. This is the third quarter of 2023, third quarter of 2022. First 3 quarters of 2023 and first 3 quarters of 2022. So for the third quarter, their revenue last year was 2.8 billion. Now it's 2.6 billion, so it's down a little bit. Let's see if they give a breakdown of the revenue. Here's a nice breakdown of their revenue so we know exactly what they do. $500 million in corn, 189 million in soybean, 140 million in other oil seeds, and 60 million in other. So they have 2 main segments, seed. We just looked at seed. Now let's look at crop protection. That's their bigger segment. 815 million in herbicides, down quite a bit from over 1 billion. Insecticides is up 363 million to 416 million. Fungicides is down a lot, about half, 420 million to 220 million. And others, 255 million. So total crop protection, 1.7 billion. Seed, a little under 900 million. That gives them 2.6 billion of revenue. And they give a breakdown of the seed by location. Their biggest location is Latin America, 380 million. Then EMEA, Europe, Middle East, and Africa, 200 million. 170 million in North America. APAC, 130 million. For crop protection, it's also biggest in Latin America, 844 million. Then 400 million in North America, which is mainly US and Canada. EMEA, 270 million, 200 million in APAC. If you want to see percent by location, of the 2.6 billion, 47% or 1.2 billion is in Latin America. 22% is in North America, 18% in EMEA, and 13% in APAC. All the expenses directly tied to generating the revenue is $1.6 billion. That's called cost of goods sold. Then you have R&D, $335 million, SG&A, $670 million. They have to amortize their intangibles, $170 million. Intangibles get amortized. Fixed assets get depreciated. They have an operating loss of $444 million. Last year was $400 million. A net loss of $300 million, similar to last year. So that gives them a loss per share of 45 cents. And their shares outstanding are going down, which is nice. 719 million last year to 708 million this year. So they bought back about 10 million shares. Let's look at their balance sheet. This is as of 9/30/2023, 12/31/2022, and 9/30/2022. Current assets, $16 billion. Current liabilities, $10 billion. So they have a nice current ratio, about 1.6. $2.3 billion of cash. It looks like they sell a lot on credit. Accounts receivable, $6.6 billion. Inventory of $6.3 billion. They break down their inventory into 3 steps. Raw materials, $800 million. Semi-finished, $2.7 billion. And finished, $2.8 billion. Their PP&E, property, plant, and equipment, is $8.9 billion minus $4.6 billion of depreciation. So that gives them a book value of $4.3 billion. Their largest asset is goodwill, $10.4 billion. A little less than half their acquisitions are crop protection companies, $5.1 billion. A little more than half their acquisitions are seed companies, $5.3 billion. And then they have other intangible assets, $9.8 billion. Here's a breakdown of the $9.8 billion. $1.8 billion is trademarks, $900 million is technology, customer related, $1.7 billion, and germplasm is their big one, $5.3 billion. Their seed segment is a leader in developing and supplying advanced germplasm. So their total assets are $43 billion, a little more than prior quarters. Their total liabilities are $18 billion, $10 billion current, $7 billion non-current. Their biggest liability is short-term debt, $3.6 billion, accounts payable, $3.7 billion, long-term debt is $2.3 billion, so not too much debt. When you take their assets, $43 billion, minus their liabilities, which is about $17.5 billion, you get their equity. That's $25.5 billion. The way they calculate $25.5 billion, it's how much money they raised from selling stock, $27.9 billion, and how much money they made from running their business, $325 million. Retained earnings would be a lot higher if they didn't buy back so much stock. Let's take a look at their statement of cash flows. This is for the trailing 9 months, and the first section is the operating cash flows, which doesn't look too good. Negative $2.6 billion, last year negative $2.1 billion. So they really need to improve this. In their investing section, they spend $400 million in CapEx, $1.5 billion in acquisitions. If you follow this company, you know they acquired Stoller Group. They're a big name in the biologicals industry. They also acquired Quorum Vital. This company is an expert in microbiological technologies. For these 2 acquisitions, they spent $1.2 billion. In their financing section, they added $3.4 billion of debt. They paid $1.3 billion of debt. They bought back about $600 million of stock. Last year, $800 million. They do buy back lots of stock for a company with negative operating cash flow, which is kind of interesting. Here's their stock price since they started trading in 2019. It looks like they opened around $30, and from May 2019 to October 2020, it pretty much traded sideways. Then up until November 2022, it had a really nice bull run, almost getting to $70 a share. But ever since then, it's been pretty bearish, coming back down to the mid-40s. Still trading higher than IPO price. Let's look at the stock on Simply Wall Street. Its last price, $46.32 billion market cap, down 1% in the past week, down 27% in the past year. Let's see what they say about the company. They operate in the agriculture business. It has 2 segments, seed and crop protection. The seed segment develops and supplies advanced germplasm and traits that produce optimum yield for farms. It offers trait technologies that enhance resistance to weather, disease, insects, and herbicides used to control weeds, as well as food and nutritional characteristics. This segment also provides digital solutions that assist farmer decision-making with a view to optimize product selection and maximize yield and profitability. The crop protection segment offers products that protect against weeds, insects, and other pests. Also diseases, as well as enhances crop health above and below ground through nitrogen management and seed apply technologies. This segment provides herbicides, insecticides, nitrogen stabilizers, and pasture and range management herbicides. It serves the agricultural input industry. The company operates in the US, Canada, Latin America, APAC, Europe, the Middle East, and Africa. They were incorporated in 2018, headquartered in Indiana. Simply Wall Street's valuation is $93. They say it's 51% undervalued. 24 analysts priced this stock at $59. They also say it's undervalued. Their revenue back in 2016 was $14 billion, dropping to $10.7 billion in 2017. Then a steady growth up through 2023, $17.3 billion. Their forecast for 2024 is $17.6 billion, 2025 $18.3 billion, and 2026 $18.6 billion. Here's their dividend yield since 2019. It peaked at 2.1% in 2020, and as the stock price went up, the yield went down. It came down to 1%. Now it's currently 1.4%. The forecast for 2026 is 2.1%. The CEO's annual salary is $1.3 million, total compensation $15 million. His tenure as CEO is 2.2 years. In the past 12 months, there's been only insider buying, no insider selling. About 50,000 shares have been bought by insiders. 83% of the company is held by institutions and 17% by the general public. Vanguard is their biggest shareholder at 11.5%, then Capital Research at 7.7%, then BlackRock 7.5%, TIAA-CREF 2%, the UK company Independent Franchise Partners 1.8%, Fidelity 1.3%, DuPont, the company they used to be part of, 0.6%. Their employee count has been pretty steady. It was 22,000 in 2018. It's currently 21,000. The ticker trades on the New York Stock Exchange, Bursa Stuttgart, Mexican Bolsa, London Stock Exchange, Deutsche Börse, Wiener Börse, Xetra, and last Sao Paulo Bolsa. So let me know what you think. Give the video a like, subscribe, or comment below. If you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.